Be careful and watch your next move. In the New York City borough of Queens, Jackson Heights is where Ray Dalio was born. His father was a jazz musician who performed on the clarinet and saxophone in nightclubs like Manhattan's Copacabana, while his mother was a homemaker. When Ray was 8 years old, the father relocated to the Long Island suburb of Manhasset. The young Ray Dalio liked to play with his friends, participate in sports, but he detested schoolwork, especially rote memorization. But he was anything but indolent. For extra cash, he had a paper route, manicured the lawns of his neighbors, and cleared snow from their driveways. From the age of 12, he worked as a caddy at the Links Golf Club, a prestigious facility where his clients included Wall Street financiers, the Duke of Windsor, the former vice president, Richard Nixon, and many more. Ray Dalio was attracted by the chatter of the booming stock market on the golf course during the boom years of the 1960s. He purchased shares of Northeast Airlines with the $300 he had earned from his caddy earnings. It was the only significant corporation whose stocks he could afford at $5 per share. In fact, Northeast was the target of a merger attempt. The 12-year-old caddy immediately saw a return on his investment treble. Ray Dalio became addicted. He conversed with senior investors while reading the annual reports of significant corporations. He gained knowledge through trial and error when he was since applied to his work as an investor. He discovered that mistakes can happen despite meticulous investigation, and mistakes can be costly. He also discovered that the only way to outperform the market is to be right while everyone else is mistaken. He solicited feedback from the most knowledgeable investors he knew whenever he formed an opinion about the potential of a certain stock. He'd amassed his stock portfolio by the time he finished high school, one that was worth several $1,000s, a sizable sum for an adolescent in the late 1960s. Ray Dalio had some trouble selecting a college because of his average high school grades. He later enrolled at Brookville, New York C.W. Post College, a branch of Long Island University. Throughout college, Dalio continued to buy and sell stocks, but he also developed a fascination with commodity futures. He was drawn to this industry because of the low margin requirements, since he saw a chance to make a significant profit on a small investment. How would you rate the current market? Statements below are from Dalio. I agree that your description of the journey as a fool's errand is accurate. To say, here's the stock market, and I'm going to be time the movement to the market. All right, you know what it means. You're going to correctly predict what the next alternative move and other things are. Many things are dependent on many other things, and everything changes. Investors need to understand two things. I believe, most crucially, that cash is not a safe investment. It's not a safe place since it will be taxed by inflation. Seems excellent since it's not volatile that you're paying a tax of a few percent a year on it because there won't be an interest rate that will even come close to making up for it. Because of the way portfolios operate, it's important to A, avoid getting involved in it, and B, understand how to balance a portfolio. For example, you can observe in the markets today that when stocks decline due to lowered growth expectations and a greater likelihood of easing, the bond market rises when other markets see gold prices rise. You can see these relationships if you follow daily market activity. Wealth is not so much as loss as it's shifted. If you know how to balance these investments, we do it at what we refer to as an all-weather portfolio. That's the most crucial thing. Be in a secure, well-balanced portfolio so that you may lower your risk without lowering your return. You should also avoid trying to time the market, since even if you have a fantastic market timer, events can change the world and alter what should be priced into the market. Every person, business, and government over time must generate more money than you spend in order to establish a balance sheet and an income statement. Others seek to convert when a currency becomes a reserve. Because of this, one is granted the obscene privilege of being able to borrow money and generate debt, which also grants us power. Like a lot of our sanctions are based on the fact that the dollar is a reserve currency, etc. However, throughout history, currencies have always been devalued or destroyed, and in the cycle when it becomes unattractive to own bonds or debt instruments in that currency. There is a supply-demand issue because a bond is a promise to receive currency. So when you own a bond, you are long a lot of currency because that's what they promise to give you. They have the printing press. There have always been shifts in who is responsible for accounting for the currency, and there have been other changes. In a fiat monetary system, we're running very large deficits and we're monetizing that produce bonds that have to be sold. When I look at the supply and demand for these bonds, I know who the buyers are. You know there are limited numbers of really big buyers. So when you look at the portfolio and so on, calculate what that is the market price for these bonds. For example, China accounts for a large share of global trade than the United States. Return often as we cover more. Keep an eye out for our next episode.